A big central bank week, big earnings week as well, but maybe let's just start with the central banks and the hikers. So Bank of Japan, the expectation is that we are probably going to get a hike out of the Bank of Japan tomorrow, maybe the beginning of quantitative easing. Certainly markets are beginning to reflect that probability. What is your call? What are you expecting out of the BOJ tomorrow?
Look, I must admit the BOJ is a close call. I think we're almost certainly going to get details in terms of quantitative tightening, or a slowing in quantitative easing at least. That's for sure. The debate is about whether we'll get a rate hike or not. I sort of lean to the view that we probably will get a rate hike. I suspect 10 to 15 basis points again. I think that's why the Nikkei index is well off its highs. Markets started to factor that in. But I think the BOJ again will say that it's going to be a long process, that they can argue that inflation is around the target, but it's not decisively so. Wages growth is still a bit on the soft side, and the Japanese economic indicators there are a bit mixed. So I don't expect this to be a hawkish tightening. I think it will be a more cautious tightening. Yes, more on the way, but don't expect big rises in Japanese interest rates going forward.
Let me turn to the other major central bank decision this week. Nobody's expecting the Fed to cut interest rates now, but certainly perhaps to lay the foundation for a September cut. 66 basis points priced in for the year, so possibly even November as well. Shane, you write in your research that you think that the risk of recession in the U.S. is growing. Do you think the Fed are behind the curve?
Well, that is the risk in all of this, and they have to allow for that possibility. Up until recently, all of their focus has been on inflation, but we have started to see not so much people in the Fed, but people who were formerly at the Fed getting more concerned about it. Most notably, recently, Bill Dudley, who was the president of New York, the New York Fed. That's the third most senior position at the Fed. He's a fairly balanced economist. If he's starting to get a little bit of concern that the Fed might be falling behind the curve, then I think we should take notice of that. And I suspect that there are more decision makers at the Fed who are sort of gradually coming round to that view. It mainly flows from the very weak forward-looking labour market indicators we're seeing in the US. Big falls in job openings. We get an update on that fairly soon. Quits. And indeed, job placements, all those sorts of things are showing a decline. Now, historically, you can see a situation where job vacancies go down in response to weaker labour market demand. I think that's what's been happening, but it just shows up in lower vacancies rather than higher unemployment. Now, I think the risk is that as vacancies or openings continue to fall, that you will see more decisive increases in unemployment. And that would obviously pose a risk for the Fed because the rise in unemployment is already quite significant, and on some rules is getting close to the point where maybe it starts to confirm a recession. So there's still a fair way to go in all of that. I don't think the Fed will be in a comfortable enough to cut this week, but I do think they will set us up for a cut in September.
Yeah, it feels as though the world is going to look a little different in the next couple of months, especially because many of those global economic growth indicators have started to turn south. You have the beginning of the rate cutting cycle imminent out of the Fed, the Bank of England, ECB have already started, Bank of Canada have already started. What does this global easing cycle look like?
Well, I think it's gradual at first. It may accelerate as time goes by and central banks realise that they're dealing with weaker growth and not just lower inflation. So far, our base case is that it's going to be relatively benign, so relatively gradual, at least initially. But, we will see more central banks kicking in. I think by the time we get to October, we will have seen all of the major central banks, perhaps excluding the one in Australia, starting to cut rates. We've already said, as you say, Europe, Canada, you could add Sweden, Switzerland have already started to cut. This week we could see the UK. In a couple of months we'll see the US. New Zealand will start to kick in terms of developed country markets, and then Australia probably not till early next year. But we are going into an easing cycle. We've already seen many emerging countries' central banks start to cut rates. So the environment is becoming very different to what you saw, say, 2 years ago when central banks were all moving towards tightening. Now it looks like a concerted, I wouldn't say coordinated because it's not coordinated, but concerted easing cycle kicking off. Now, ultimately, that should be positive for shares unless you get a recession. If you get a recession, then you're going to need lots more rate cuts. But if it's the hope for soft landing, then it will be positive for shares.